Hello everyone, welcome to ElliottWave.com YouTube channel. This is Henry and today is Tuesday, February 8. The time is around 3:45 a.m. GMT. And for today we're going to be looking at the chart of oil. This is a 45 minutes chart here. And we can see right here that it continues to go up, right, for now. And we can see this with 1 here, with 2, and then now we have a 3 and a 4 in place, and potentially we can see one more leg up to finish with 5 as long as pullback stays above 86.75. All right. So we're gonna take a look at a couple of things, both in the short term as well as the medium term in oil, looking at the structure, looking at the alternates and all those things. Now a couple of things here. um, Alternates in the shorter cycle. Now the most important level in the very near term is this with 4. Now as long as we stay above here, this still can happen, but if we break below here, then it is going to open up more downside, and this will become your new W. For example, if we break below here, and this is going to be your X, and then you will have another 3 swings down, potentially to reach the 100% extension of the WXY here, which can go all the way down to $90, right? So I think $90 is not too bad. I mean, if you measure the retracement, $90 is 50% correction of the wave 3. Now typically in the wave 4, ideally you want to see wave 4 ending somewhere between 23.6 and 38.2. This is the most ideal area for wave 4 to end, but 50% is not totally too big. Sometimes it could go to the 50% of the wave 3, but I think what you don't want to see is if it continues to go down, let's say go to 61.8, that will be too big to be wave 4, and that will indicate something else is going on if that happens. Okay. So shorter cycle then, until you really break above wave 3 right now, then of course we cannot completely rule out a double correction, right? So like we always tell the members, the way we trade using Elliott Wave is not just simply following all the lines and then trade every time, every moment, but we need to have a strategy, a system, and in our company we always recommend 3 or 7 swing, right, in the direction of the trend. You're buying a pullback or selling the rally in 3 or 7 swing, and in this case you can see a clear 3 swing. We know the trend is bullish in oil. I mean, if you follow oil at all, you know it keeps making new high. So you can see from the peak of oil, we got a very clear 3 swing, and if you just simply measure the extension, you can see how it perfectly hit the 100% in rally. So again, if you use the technique of understanding correction is always in 3, trend is always in 5, then in this case, when someone attempted to buy 3 swing because they believe it is bullish, you can see the reaction higher after hitting the 100% extension, right? So anybody who bought it here then would have already been able to, let's say during the rally, take partial profit or move stop loss and all those things, right? But anyway, so it's all about the technique of trading and where you enter, rather than, oh, this forecast is wrong, this forecast is right, because every single time we always have alternate moves. This is like playing chess where you got multiple different possibilities, right? So here, for example, yes, we could break below here and do a double correction, and now if it does, because the first leg is a 3 swing, then actually you have a better chance the next 100% will find another buyer here, because the first leg is not impulse. So that means you can conclude this is still a bullish market, because the first leg is clearly a 3 swing here. I mean, there's no way around it that you're trying to label this as a 5 waves, right? So that's the first observation. It is a bullish market. How do I know? Because it's only 3 swings. And then you got reaction. And there's no extension in the third swing. It's not 5 waves. And so it is a bullish market is the first observation. Secondly, the alternate suggests, yeah, we can do double for sure. We can break below here, do double, but still it is looking to me still like a bullish market. Okay. Now let's take a look a little bit, zooming out and see where we are. So remember this 1, 2 in the minor degree, 3 and 4. If I look at the daily time frame and I'm trying to put the 1, 2 and 3 and 4, this is where the location is. This 3 and 4 here. Now if you look at the daily chart, now you gotta take a look at this low here from last year, December 2nd. This entire rally, I'm not sure about you, but it definitely looks like an impulse, right? It definitely looks like an impulse. If I want to count it, I can if I want to. This is the best way to count it. 1, 2, 3, 4. That's it. All right, and that seems to be the best way to count it for now. And now we could see the end of wave 5 soon, in which you already have 1, 2, 3, 4, and then one more push possibly will end this entire move. So then the question becomes, when you want to trade, you need to understand where you are in the larger degree, understand all the possibilities and so on. Now the question is, if you believe this looks like we might be finishing wave 5 soon, even from last year, so is it worth it, for example, for you to try to trade this? Only you can answer, right? I mean, even if you do decide to do something like that, you need to understand the possibilities, right? You need to understand how to protect yourself, your stop loss, your position sizing, your risk, because nothing is 100% in trading, right? Now, for example, I mean, this could be your 4 and a 5, and it's not ideal, but it's not impossible. It's not ideal, but it's not impossible. So if this is 1, 2, 3, 4, then in fact, for example, this could be over 5, and suddenly you finish this entire move, and then suddenly you don't do any more upside and you do a bigger pullback already, because then you need to correct at least this 5 ways rally. So it really depends. I mean, it's quite easy to adjust if you need to, but this for now seems to be the best interpretation of the rally. The structure is 1, 2, 3, 4, and so this from here, it looks like 3 swing so far. On top of that, the pullback also looks like a 3 swing, which is still bullish, because the first leg is a 3 swing. So overall, I think this view still is the best way to count it, right? So that's why it is our primary view, and we're looking for the upside to finish one more leg, and then from there potentially we finish this 5, and then not only that we finish the 5 in red, we could potentially finish this entire 5 ways as well from December last year, and then see a bigger pullback. Now, before everybody starts to get very bearish in oil, remember, structure can always extend. For example, if this becomes, let's say inflation gets out of control and everything continues to rally parabolic, we could be doing a nest. We got 1, 2, 1, 2. So instead of 1, 2, 3, 4, this could be 1, 2, 1, 2, and then starts a big move like a wave 3 of 3 from here. But then it's usually when you are starting to get super bullish like that, that's usually when things go wrong. So I think the more conservative count usually is the best in terms of preparing yourself, right? And so I think this one looks pretty reasonable. And again, looking for one more leg to finish this 5 ways up from January 25th, as well as potentially ending 5 ways up from December last year as well. Okay, so if you want to get more updates on oil or other commodities, Forex indices, we have 14 days trial, right? The link is provided in the description of the video. And I'll see you all again next time. Have a nice day, everyone.